Welcome to today's deep dive into one of the most pressing economic developments, Trump's tariffs and their potential impact on the financial markets, particularly Bitcoin and the broader cryptocurrency landscape. As new tariffs are announced, uncertainty is rising among investors. The big question everyone is asking, will Bitcoin emerge as a safe haven asset during these turbulent times, or will it suffer the same fate as traditional markets? We'll explore the possible outcomes by breaking down key factors, including economic uncertainty, market sentiment, Bitcoin's historical performance, potential price impacts, broader market reactions, and regulatory implications. If you're an investor, trader, or just someone interested in how global politics influence digital assets, this analysis is for you. First, let's talk about economic uncertainty. Whenever a major government policy shift occurs, especially one that directly impacts trade, taxation, and investment, markets react. Trump's tariffs are creating concern because they will make imported goods more expensive, potentially reducing consumer spending, slowing economic growth, and straining international trade relations. Tariffs function as an economic tool used to protect domestic industries, but they also have consequences. Higher import costs mean that companies might increase prices, leading to inflation. If wages don't rise at the same rate, consumer purchasing power could decline, slowing down economic activity. Moreover, trade partners such as China, Mexico, and Canada may respond with retaliatory tariffs, which could further disrupt global supply chains. When uncertainty rises, investors tend to shift their capital towards safer assets. Historically, this has meant moving money into U.S. Treasury bonds, gold, or the U.S. dollar. But now, with Bitcoin emerging as a decentralized alternative, some are questioning whether it could serve as a hedge against market instability. Bitcoin has been frequently referred to as digital gold because of its decentralized nature and fixed supply of 21 million coins. Unlike traditional currencies that can be devalued through inflationary policies, Bitcoin operates independently of central banks, making it an attractive asset for those who seek financial autonomy. However, Bitcoin's reaction to financial crises has been mixed. In some cases, such as during the COVID-19 market crash of 2020, Bitcoin initially fell alongside stocks as investors liquidated assets to secure cash. But in later months, Bitcoin rebounded significantly, fueled by growing institutional adoption and concerns over inflation caused by stimulus measures. So, will Bitcoin act as a safe haven this time, or will it behave like a risk asset and fall along with traditional markets? The answer depends largely on market sentiment. Market sentiment is a crucial factor in Bitcoin's price action. Right now, the fear surrounding tariffs is creating a risk-off environment where investors move away from high-volatility assets like stocks and cryptocurrencies. This has already led to sell-offs in traditional markets, and Bitcoin has experienced some price fluctuations in response. There are two opposing arguments regarding how Bitcoin will behave in this environment. 1. Bitcoin as a risk asset. Some argue that Bitcoin is still primarily a speculative asset, meaning that when fear increases in the market, Bitcoin will decline alongside traditional investments. In this view, institutional investors, hedge funds, and retail traders alike may sell their Bitcoin holdings in an attempt to de-risk their portfolios. 2. Bitcoin as a safe haven. Others believe that Bitcoin will rise as trust in fiat currencies and traditional markets declines. If tariffs weaken economic confidence and lead to inflationary pressures, investors may look to Bitcoin as an alternative store of value, similar to gold. Historically, February has been one of Bitcoin's best-performing months, often yielding strong price increases. But will this trend hold given the macroeconomic challenges? Analysts are closely monitoring Bitcoin's behavior to see if it will follow its historical pattern or diverge due to economic concerns. During previous market crises, Bitcoin has sometimes acted as a counter-market asset, rising when traditional assets struggled. However, at other times, it has mirrored the volatility of stocks. The current tariff situation presents a key test. Will Bitcoin decouple from equities and act as a safe haven, or will it face downward pressure like the broader financial market? Let's explore some possible scenarios for Bitcoin's price movement in response to tariffs. 1. Bearish scenario: Bitcoin declines. Due to market uncertainty. If the tariffs lead to slower economic growth, higher inflation, and increased investor caution, we could see a pullback in Bitcoin's price. Institutional investors may reduce exposure to Bitcoin as part of a broader risk-off strategy. Retail investors facing financial pressure due to rising costs may sell Bitcoin to secure liquidity. Second neutral scenario, Bitcoin maintains stability amidst uncertainty. Bitcoin might experience short-term volatility, but remain relatively stable as investors wait for further developments. Some capital might flow out of Bitcoin into more stable assets, but long-term holders and crypto believers could prevent major sell-offs. 3. Bullish scenario. Bitcoin rises as a hedge against economic weakness. If the tariffs result in inflationary concerns or declining confidence in fiat currencies, investors may turn to Bitcoin as a safe haven. As traditional financial markets struggle, Bitcoin could gain momentum and attract new investors seeking protection from economic instability. Broader cryptocurrency market reactions. Bitcoin isn't the only cryptocurrency affected by macroeconomic trends. The altcoin market, which is typically more volatile than Bitcoin, could experience even sharper price swings. Ethereum. Since Ethereum is often used for decentralized finance, DeFi applications, economic instability could lead to fluctuations in DeFi protocols. If investors exit risky assets, DeFi yields may decline, impacting Ethereum's demand. Altcoins. Smaller altcoins often experience greater volatility. If the market turns bearish, we could see significant sell-offs in speculative tokens, while more established cryptocurrencies like Bitcoin and Ethereum may hold up better. Stablecoins. In times of uncertainty, stablecoins like USDT, USDC, and DAI tend to see increased usage as investors seek refuge in dollar-pegged assets within the crypto space. Regulatory implications. Could tariffs lead to stricter crypto regulations? Whenever economic uncertainty rises, governments tend to reassess financial regulations. With Trump's tariffs impacting trade, discussions about cryptocurrency regulation may gain new traction. Policymakers could push for stricter oversight on digital assets, including taxation and anti-money laundering measures. Increased government scrutiny on capital flows might lead to new compliance requirements for crypto exchanges. If the financial system faces instability, central banks might accelerate efforts to develop central bank digital currencies, CBDCs, to maintain control over the economy. Final thoughts. What should investors watch? As tariffs reshape global trade, Bitcoin and the broader cryptocurrency market will be influenced by economic growth trends. If tariffs slow growth, investor confidence could shift. Market sentiment. Will Bitcoin be seen as a risk asset or a safe haven? Institutional adoption. How will hedge funds and large investors react to economic uncertainty? Regulatory developments. Will tariffs trigger new cryptocurrency policies? Trump's tariffs are adding a new layer of complexity to the financial markets, and Bitcoin is at a critical juncture. Will it thrive as a safe haven, or will it face headwinds like traditional assets? Only time will tell. What do you think? Will Bitcoin rise as an inflation hedge, or is more downside ahead? Let us know your thoughts in the comments below. If you found this analysis helpful, don't forget to like this video and subscribe for more updates on cryptocurrency, financial markets, and economic trends. Thanks for watching, and we'll see you in the next video.